Good afternoon. It's Quant Trade Edge with the wrap up for Tuesday, April 19th, 2022. There's been a lot of videos today. ES, the Forex trade, was our best trade that we were watching, and I did a video this morning, hope you caught that, before it triggered, or it might have been after it triggered, before it played out. And just wanted to show you where that went, and again, the details of it will be in that other video. I'll link it in the video here, but we basically had a two-wave down pattern, and if we take this to the 60-minute, this is a 15, but here on the 60-minute, as soon as we broke above previous day high, previous day high, we broke above it right here. And then we had a very clean, this is the hourly chart, we had a very clean two-wave pattern from the first break right here, A, B, C, making this our risk bar. And this risk bar at this high here stopped 2 ticks shy of 6R. So again, the power of waiting for those setups is the asymmetry that you get. For that amount of risk, this amount of reward. 44.29 was 4R. So that was actually a little too conservative today. And that's kind of where you want to wait and watch the bar play out. This is the opening bar that had that much. Now, the reason I wanted to start with this is because what it has morphed into now is a vol compression pattern. If you look at this previous swing high level, well, I guess it's a little lower here, 56, right there. We've built the right side of this, and we're putting in a flag. And if we were to break higher from this flag or above this level, that could ignite a bigger move in the S&P 500. And going back to our vol compression measurement, we did get down to 0.63, 0.66 for a few bars in that flag, so that qualifies. The volume's a little harder to read because overnight versus pit, it's not very clear. If we take this to a 135 pit, and again, I like the 120-minute chart on things that trade primarily, half the day, like a pit session. On the S&P, I use 135 so that each bar represents exactly the same amount of time, because the pit session is 405 minutes long. So, if you remember from our Taylor lesson, the way this plays out is, first we find a divergence. Let's see if we can find that. Take this volume out, it's pretty meaningless. And there it is, our divergence between this point and this point was the first step. And then, I guess we could look for an RSU, except this wasn't oversold enough to give an RSU. Then we had a trend line break, and let's check our MACD. We did get a crossover, and we did get that crossover right on the break. Okay, so it wasn't ahead of the break, it was on the break. We did poke above that break level, and we're consolidating here, and even if we were to pull back some, this still ought to be supported for that break. And going back to the daily again, we had 2 PF3s down that did not even get as low in momentum as that first push. And then we had a lower push down with higher momentum. So this is a 2-period rate of change divergence. And also, as I pointed out on the video this morning, this was a hoagie break that got rejected, and then the high got taken out. So, heading to the top of that hoagie should be our first order of business, and that's around 44.66. So that's a long-winded way to say what is left here is the VCP pattern, which may break out this afternoon. Got another hour left, so let's see. On crude, yesterday we tested above this swing high and then closed below it. That's basically a trap, and that set up a good 4x trade to the downside. And if you were up, which, you know, sadly I wasn't, that break happened at 4:30 in the morning. And then from that break, we got a very clean two waves up on the 5 minute. You got this, 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 and that made our risk bar this right here, and the size of that risk bar was only it's not showing me, but I saw it before. It's 27 cents. We got this test up again at 6:40 in the morning, which, you know, if you were waiting to get half of the risk bar, you would have been able to get that in this particular case. But even without that, this played out to the tune of 17R. It's just insane, the amount of asymmetry. For that amount of risk on the exact same pattern that we study and watch every day, 17R. Nat gas. Now here is an interesting one. If you look at it on a 2-period ROC, this has something that looks like the TUP trade. Now on the TUP trade, we typically want 5 days where we close with a 2-period RSI above 95. Here we had 3 days, and then we pulled back, and then we got 3 more days, 1, 2, 3. And yesterday was the top of that 3-day pattern. So, you know, there was a U-turn setup that happened in the middle of the night at about 3 a.m. because this was a clean 2 waves on that. But on the 5 minute, you'll see that we didn't break below the previous day's low until 7 a.m. So on a 5 minute, there was no setup, but 7 a.m. is an active time for natural gas. If you push it down to a 3 minute, you'll notice that the first break gave us an ABC pattern. Let me take some of this stuff off to clean it up. We don't need volume. Whoops. What? Okay, we don't need volume. We don't need this 2-period RSI. Don't need these Keltner channels. I'm trying to keep this as clean as possible so you can see the pattern. When we broke below, we did get an A, B, C, and if you used this as your entry bar, you got maybe 1R before it failed. Now it's set up again, A, B, C, and now using this risk bar to the low, which if you see our other video, I'll link it here. You know, we were looking at 695 as very key support that we didn't expect to break. This is over 9R down to here. So again, another great asymmetric situation. You know, every time you lose 1R. When things work out, you know, typically we go for at least 4, 6, 8. We saw 17 in crude just now. That's the beauty of the asymmetry. It can be a coin flip. You can have one failed entry for every good entry and still come out way ahead. Let's see, okay, then what's setting up now on natural gas is we have our first close below the 5-period SMA. That would be more clear on the natural gas homework page. These arrows represent the 7th, 8th, 9th, 10th, 11th, 12th, 13th day above, first day below. I would expect there to be a little bit of a pop-up. And one way to find that pop-up is to look for a U-turn. And you can see that pattern we traded earlier left an ABC up with a U-turn spot of 7.142. So that's already gotten its U-turn. If we're waiting for a 15-minute U-turn, we're going to need it to take this out, 726.2. We'll see how much room it has to the upside if that happens. Another interesting thing that's setting up for tomorrow is the Australian dollar. Now on the daily, this is merely an inside day. There's nothing special about it. And in fact, I believe we're only one wave into it, but let's double check and see. Yeah, this is all just one leg down, so it's not even a two-legged pattern. But what I liked that I saw was, let me see if I go back here so I don't mess things up. On the 240-minute chart, so this was the breakout we traded initially. It's broken out, it's come back down through it and failed. But on the 240-minute chart, we are starting to have a good set of divergences. We have this low that was made here, and then this low that was made here, and then this higher low, lower low in price, higher low in RSI. So we've got the start of what could be an upcycle, and so that's positive. But we would want to see a break out of this range. So basically the 4x trade, we want to see us take out this 74.10 and then assess if a good two-wave pullback sets up. That's pretty much all I had looking forward. A lot is going to be determined by this vol compression trade on, volatility contraction trade on the S&P, and if this plays out, it's going to change the nature of a lot of the markets that we're trading, because this would be two legs complete. And a little bit of secret sauce here that you don't just get purely from the technicals is if you look at this right here in the context of our recent activity here, this violent move up pulled back 50%. But how ugly does it feel? How ugly does that feel? And I'll show you an objective measure of that, and that is the AAII sentiment. This comes out every Wednesday, and last Wednesday only 15.8% of people voting said they feel the bullish. They think the market will be higher in the next 6 months. So this is a very simple indicator, because they ask one simple question: where do you feel the stock market will be in the next 6 months? Higher, lower, about the same. And this 15.8 is historically the lowest reading ever. So typically, if we were rolling over and we were down 30%, that would make sense. We've only given back half of this monstrous rally. And by giving up half of this monstrous rally, people are already crying. The 15.8, only 15.8% are bullish. So that tells me a lot of people are on the sidelines, and there's a lot of fuel for a rally if we can get one going. And, the sentiment was really bad here. And if you read, I believe it was Martin Pring, where he talks about, higher lows where the sentiment is way worse than it was at the lowest low, and it's typically a bullish setup. So I like the fact that we had our one big impulse off of here. We only pulled back 50, and it's a very clean two waves. When you discount the hoagies, it's exactly two waves, and then today is the exact day that we're breaking above the risk bar. So, this is early in the rally. And basically what that means is we do not expect to go below this 43.55 level if this pattern is good. So anyway, a lot of other markets are going to hinge on that. So let's see how this VCP plays out, and I'll touch base again tomorrow.